completely insane. It's actually freaking insane. Like, Palantir's now in the news. He's on Bill Maher. Everyone's talking about Palantir. The stock is up 6-7x from its lows. They're talking about how they're saving tens of millions of dollars right off the bat. If you're head of sales for any of these companies right now, you're like, dude, we probably need to do this.
I just want you to give a quick introduction for the 5 people that don't know you. You took 20,000, turned it into 60 million. I mean, can you just describe kind of your history in investing over the past 20 years, and then we'll get into Palantir?
Yeah. I've been investing since I was 13 years old. I just turned 50 this week ago. So I've been in the market a really long time. I've seen a lot. I've always been a retail investor. And I mean, the short story is I've tried every type of investing style. But I guess about 17 years ago, I went back to a style of investing that I experimented with as a teenager, which is more observational based. It's kind of like a modern interpretation of what Peter Lynch did back in the 80s. For those of y'all that don't know him, he was maybe the most legendary fund investor of all time. And he had this observational investing style of just walking the mall and kind of seeing which stores had the longest lines at the cash register. It sounds really stupid, but he ended up managing the Magellan Fund, which is the most famous fund in history. And that really stuck with me. And I had a lot of success as a kid doing basically just that. And even as a kid, I was, had some pretty amazing investment returns. I left that approach for a long time, and then I guess it was my mid late 20s when I was really getting back into investing. I said, let's just take $20,000 and just do that observational investing approach.
Did you have 20,000? Was that like a lot of money at the time?
I had like $87,000 in my bank account. So I took 20 of the 87,000 and I just started doing that. And 3 years later, the 20,000 was 2 million.
How did that happen? 20 to 2 million in a nutshell.
It was, I can't remember the exact trades, but I wrote about them in my book, Laughing at Wall Street, which I published, I think 2010-ish. So it was from 2000 or 2011. It was from 2007 to 2010. That was the three-year period that I turned 20K into 2 million. And I talk about each of the trades that I made during that time period. And they were all like, just, investing in stuff like, it's just stuff that you see on the street, man.
Right.
Stuff that anyone can see. It's basically trying to identify change in the world a little bit quicker than other people. It could be change in like consumer behavior or cultural shifts or changes in technology. And then it's about connecting the dots back to companies that would benefit or be harmed by that change. And so you got to connect the dots pretty quickly. And there is a process to it. It's not quite that simple. Once you identify the change and connect the dots back to a company, you have to determine that it's a big enough change to move the needle for that company,
Right.
either perceptionally or revenue, right? And once you determine that, you then need to figure out, okay, to what extent does the rest of the investing world already know about this? And there's a little bit of a process to gauge the degree to which other investors are already in tune with that thing that you believed you discovered and connected the dots with. So, once you determine that the majority of investors really haven't put together the pieces yet, or haven't fully appreciated your thesis yet, really the only last thing to do is just to assess the degree that there's nothing else happening at that company that could be more important than that one piece of information that you think is really important during that time period. And so that's kind of the process I talk about in my book, Laughing at Wall Street. And of course, this entire process became way more digital during the digital age. And Jack Schwager, in his book Unknown Market Wizards, wrote a chapter on me a few years ago. I was one of the 5 equity traders in his book Unknown Market Wizards. And that was probably a better description of how I do that today, which is not walking into restaurants and malls, but more about, like dissecting change through comment analysis on social media. So the
Right.
majority of my observational investing approach today is working about 3 hours a night reading mostly comments on TikTok videos, believe it or not. That's kind of my golden source of information of like listen, the world is digital now. We all speak to each other, right, through comments. So if there's something that people care about, if there's something that they're passionate about, if there's something that they love or something that they hate or something that they want to do, that information is readily available for any human on earth to discover, just by reading what people are talking about on videos. And so,
If someone pushes back and says that's too easy, it's too easy to just read TikTok comments, what would your response to that be?
you know, I know it. I love that it sounds like it's too easy. In fact, for 5 years, I had a company called Ticker Tags, which was the first social intelligence company for hedge funds and Wall Street. And I sold basically, I sold software that enabled hedge funds to quantify the volume of conversation around very granular topics, that were connected back to products and brands, that were important to publicly traded companies. And what was amazing is over that 5 year period, I met with every major hedge fund in the world at the highest levels. And I was basically coaching them on what I call conversational analysis. And they all said the same thing. They were like, this is crazy. Like they audited, they had access to my personal track record. And that's the only reason they took a meeting with me, is because they would find out that, hey, this person generated X results over 15 years. So, his software must be good, right? And so, but what was amazing is that they were all really excited about it and they kept meeting with me, but their teams were just not willing to put in the time and effort to really become competent at conversational analysis and social arb trading, which is what I do, even though I had an institutional platform to help them figure this out. I eventually sold that company to Jefferies Bank. I was working closely at the time with Goldman, with the Bank of America, with Jefferies Bank, and I was also teaching sell-side analysts how to do this. And then if you go back to the late 2000 teens, a lot of those reports actually cited data from Ticker Tags, which is the platform that I had built.
Right.
But even the biggest hedge funds in the world either don't believe that you could actually do this repetitively, because the really interesting thing about this type of data is it is not, you can't build a historical correlation between the amount of time someone talks about this and the stock price,
Right.
right? Because conversation is evolving, it's changing, it means different things all the time, right? So you just have to use common sense. But what I love about it, so it's basically, it's not precise, because you can share a thesis that you came up with by analyzing conversational data on videos, and you could share it with 10 analysts and they might all have a different opinion on how that will impact the stock.
Right.
And that's where the magic is, because Wall Street really relies mostly on transactional data sets like credit card data, scanner data. That's how they get an edge on retail traders, is because, weeks before an earnings report, Wall Street has a pretty good assessment of what's going to happen. I say pretty good. It's not like perfect, right? But it's based on transactional data. So how do we get ahead of the transactional data as retail traders? Really, the only way to do that, because the transactional data is usually many days to weeks old, meaning it's someone that actually made a purchase with a credit card that has to go through the system, be aggregated, get filtered, sent to the funds. They have to assess the data, clean the data, make a decision on the data. So how do we get ahead of that? It's by analyzing what people are saying in real time. Like, what are they going to buy today before they even purchased it?
So let's get into Palantir then. So speaking of the institutional divide in terms of data and access to data, I started this YouTube channel And really, when Palantir was like $25, and it collapsed all the way to $6. And then for the next 2 years, it was basically stuck from $6 to $8. And Wall Street was telling me Snowflake was the buy. Wall Street was telling me, you know, Databricks or Datadog is the better version of Palantir. Palantir was down 80%. All we had in this community, the people that are here in this chat, was each other to crowdsource information, try to get as much data as we can to try to figure out, hey, is Palantir the real deal? Now, we had to look at lots of Karp interviews. We had to look at these deals. We had to look at customer testimonials. But ultimately, from that $6 range, we're now sitting at almost 40. It has worked out. So I guess my first question for you is Palantir still part of this social arbitrage strategy that you have? And then when did you kind of start getting into it to think there is an advantage retail investors have over institutions on Palantir?
So it's different now. Like the thesis and the trade on Palantir today, and to be clear, I basically have built my position in Palantir over the past 4 months. Okay. And I recently added a week ago. So like I'm still adding Palantir. You had a thesis. The Palantir people, believe me, they've been in my ear for 3 years, like nonstop. I thought they were all nutbags. It's just, I have looked at Palantir over the years, and it's like I don't want to say I didn't see it. I didn't want to commit the time to actually fully understanding it, because it wasn't clear to me. The path wasn't clear to me, and you know, there was a reason I did not invest in Palantir, you know, 2-3 years ago. What I regret is not taking another hard look at Palantir like a year ago,
Right.
when they clearly were starting to gain traction on the commercial side, that if you would have taken the time to do the homework, you would have clearly have seen. Now, you and all the Palantir people out there obviously were already aware of the company and studying it on a daily basis. So you saw that and you had the confidence to kind of probably double down and stick with it. I just simply didn't look at it, right? So like I didn't pay attention to, because I've been hearing about Palantir every day for years. And I was like, me hearing about it last year, like what was different? I didn't even give it two seconds to even think about it.
And when you heard it, I'm assuming you thought government company as soon as you heard it, right?
Well, I knew they were trying to move into commercial, but you know, the extent that I didn't spend the time to assess whether they were having success with their early commercial efforts. And that's what my mistake was, not getting into Palantir earlier. But honestly, like, you got to remember, in early 2023, I went all in on NVIDIA and then SMCI, right? So like a good chunk of my portfolio was just in those two companies. So I don't miss not being in Palantir. I think I did better in those two companies than I would have done in Palantir.
I would imagine. Yeah.
So that said, the thesis is different now. It's different. Okay. So the cat is a little bit out of the bag in terms of, yes, this company has success in commercial, right, with commercial clients. So the question now is, how large can that success be? So going back to a trade I made many years ago in a company called Salesforce, right? I was a sales. I talk about this, like my career before I quit it to become a full-time investor was in sales.
Well, when did you quit? How many years ago?
I quit my job right around 2007, which is when my audited track record for trading started. Right.
So you're about 30, about 30 years old at the time.
Yeah, I don't know, something like that. So, you know, my track record right now, I'm going on 17 or 18 years of like 70 some odd % annualized returns total portfolio.
Holy shit.
And my goal is to hit 20 years. So I'm really hoping that I don't screw up the next 3 years.
So you're outperforming, you're outperforming Jim Simons.
Yeah. So I actually was playing around with the new ChatGPT this week, and the old one annoyed me because it was like the one question that I knew I always wanted to ask it and have it accurately answer was, who are the best performing traders in history with a minimum 10-year track record that has been cited and or audited by a national publication or book, independent book, right? And I finally was able to get enough proper prompts in with the new Chat GPT, and it listed the top 20, and it did have me at number one out of the top 20. So I mean, but again, you can't really compare someone like me that's investing, 7 to 8 figures, has a 7 to 8 figure portfolio against someone that's managing $1 billion portfolio.
Right.
That's not really fair. Also, an institutional trader has a regulatory environment where they have to, they can only invest so much in a single company. It could only represent so much of their portfolio. So like, let's be fair there. That said, I'm competitive. It's what makes it fun. And I do want to be the best trader. Like I do want to be number one. Like only for fun, right? Like I think that would be really cool to kind of have that be a legacy of achievement. And so it's something that does drive me to continue to do this in a really good way. Anyway, getting back to Palantir though, when I was selling for a company, I realized what was happening with Salesforce. It was quite clear, right? Like when all of your friends are salespeople at large Fortune 500 companies, and you're all in the early process of onboarding or assessing, transitioning over to Salesforce, which, by the way, takes like 1 to 2 years to even make that decision. And then once you
Yep.
make the decision, it takes another 1 to 2 years to actually onboard the software. So it's like a 3 to 4 year full cycle. So what was interesting about that is it takes a long time to go from, hey, I think we're moving the entire company to Salesforce, to actually signing a contract and then building out Salesforce, like implementing it in your company. And I knew that. And I was able to see Salesforce well before other people. Again, that was a change. That was a massive global change that was happening inside every single company in the world. Not
Right.
that every company moved to Salesforce, but a whole hell of a lot of them did, right? Over that 10-year period. I think we're seeing something similar here with Palantir. So the thing that excites me most, if I can go back, like I would say one of the easiest ways to trade these companies that are in essence, sales companies, is it's all about it's a cycle. It's this cycle, right? These companies sometimes exist for years to decades, and then at some moment in time, they have the right product mix at the right time, and it's just like all the worlds align.
Mm.
So what usually happens is those companies get hyped because you're hearing about them, but people don't realize that like that's not going away for years, right? It's like a multi-year cycle, and people underestimate just how massive those companies can become. Because what I'm seeing at Palantir right now, with their client base, I can't really figure out what the hurdle would be to them not rinse and repeating that every day for the next 12 to 18 months. So I'm thinking if there was any company in the world I want to sell for, it'd be Palantir right now, right? Like I tell salespeople this all the time. Back I used to coach salespeople. I'm like, hey, you should be spending more time figuring out what company you want to work for than trying to be better at whatever company you work for. You can be a middle of the road salesperson at a company that's going through one of these super cycles and make 5 times more than the best salesperson at a company that's not going through one of these super cycles, right?
Right.
So this has nothing to do with investing right now, but this is just how I think about companies generally. Salesforce is having one, excuse me, Salesforce. Palantir is having one of those moments where they picked a really unconventional sales model. You're aware of it, right? Like, basically the test drive sales model. That
It's
sales
unheard of in SaaS. Unheard of.
completely insane. It's actually freaking insane.
You can curse.
Like
It's
like
okay. It's okay.
if you told me you were going, like, here's the thing, when he used to talk about this model before like started to work, there was not a single person that didn't think he was mentally ill. Like what that? Like what? Like what do you? Because who's going to even give you a chance to do that, right? Like how many company? Like you're starting instead of starting with a large top of funnel, you're starting with the top of funnel that's like that big, dude, that big. Because how many companies are just going to be like, yeah, we'll commit that much time and resources and open up our data to you who, by the way, you're a very odd person. And like, do we really want to do that with you and your weird government style company that you have? Like, it's just weird. But
Yeah.
here's the thing, dude. Here's the thing. If in that 1 in 100, scenario where that model actually works, and you start to see your competitors, like Palantir's now in the news. He's on Bill Maher. Everyone's talking about Palantir. The stock is up 6-7x from its lows. Like company after company are instituting Palantir. They're talking about how they're saving tens of millions of dollars right off the bat. If you're head of sales for any of these companies right now, you're like, dude, we probably need to do this, right? And so I could only imagine what that pipeline looks like right now for Salesforce. So it's, again, I'm saying Salesforce. I'm going back 15 years, dude.
Hopefully, we have a similar result. Hopefully.
I could only. By the way, Salesforce is a $280 billion company, right? We'll see what happens with that. But like, so I'm looking at the next 12 to 18 months. Are there risks? Absolutely. Like I'd actually love to see Palantir fall 20, 30% right now because I'd love to like go in deeper on it. But I love the risk reward of the next 12 to 18 months. I'm not like you guys. I'm not looking at Palantir like 5 years out, 10
Yeah.
years out. I'm not like, yeah, Karp thinks it could 10x probably over the next decade. I think if everything aligns, if AI doesn't completely disrupt the software ecosystem to the degree that you don't even need Palantir, and it's like you don't need anything.
Yeah.
Yeah, I think that's a possibility for Palantir, no doubt about it. But my head's not there. My head's in the next 12 to 18 months. I have no issues getting into a company that, by the way, you guys are a little biased because you're like, oh, it came back up from 7. Like, forget about it. You could make a case it should never have been down there to begin with, right?
Yeah.
Like, ever
Mhm.
should have been. That was just misunderstanding. Institutions don't really care about Palantir. Like, it's just weird CEO. Like, people were always kind of like assuming the whole thing was weird and a scam, right?
Yep.
So, in
Yep.
government, so forget about that. It's an 80 or 90, what, $80 billion company, market cap company,
Okay,
right?
so hold on. When you say and you brush your shoulders to the $80 billion company,
Yeah.
you got to help us understand this because all of us have been here. The 1,600 people in the chat, all of us have been here when it was like a $10 billion company.
Yeah.
80 billion to us sounds a little ridiculous for a company doing less than $500 million in profit, which with most of that profit coming from their cash from treasury bills. How do
Yeah.
you look at 80 billion and you're like, it's not a big deal?
I mean, look at Salesforce at 280. I mean, think about when Buffett made his investment in Apple. It felt like the latest investment ever. Remember that?
Yeah.
Remember when Buffett
It was
finally invested in
500
Apple?
billion when he invested.
And we were all laughing at him. We're like, dude, 12 years late, man. Right? 12 years. He's like, I'll make it up with volume. I'll make it up with how large my investment's going to be. Right.
Right.
And I'm kind of finally at a point where I could kind of do that too. Um, okay, maybe Palantir doesn't 6 or 7x over the next few years, right? Maybe that move is over. Like, I don't really care about that. I'm not looking at like a 6 or 7xer here. I'm looking at it, risk reward Palantir over the next 12 to 18 months. As we continue to move through what I believe, at least my thesis, is that we are still in the relatively early stages of a sales super cycle for Palantir in terms of adoption of their software at enterprise companies. So listen, you hear what I just said? That's my thesis. Okay.
Yep.
So now, based on that, I don't trade stock price. I don't do it. I don't care if I don't even know what Palantir is trading at. It's like 30 something or whatever. I don't, the valuation, you can tell, like, I barely even knew what the valuation was right now. I knew it was like roughly 70 to 90 billion, I think. I don't trade stock price. So for me, it's not like I'm getting into Palantir for a 2x or a 3x. I want to trade this sales super cycle. I'm going to make an assumption that over the next 4 to 6 quarters, we will continue to see surprisingly positive news come out of Palantir, because they've gotten past that tipping point, to where now, instead of them having to convince the world that they're special and you need to pay attention to them and you need to take a look at their product, now everyone is coming to them. And if you look at just the few clients that they don't have very many clients. They only have like a few hundred enterprise clients, which is actually very small. Okay.
Yeah. Yep.
When you look at those clients, that's one thing that really impressed me. Was if you look at how many of those clients have been around a few years, which are like very small, very small. You look at the increase, they're really elevating their spend levels over a few years. So the assumption is we're going to see that with all 300 of their commercial clients. Plus, we'll see them start to continue to onboard more and more and more clients over the next 18 months. That's what it's not a complicated thesis. And listen, I love the risk reward when you have a companies going through these cycles historically, regardless of valuation. If valuation is elevated, more often than not, unless something really meaningful happens in the market to bring down valuations as a whole, the valuation will continue to be elevated, just be elevated on a higher base, right? Based on that revenue growth. So I feel comfortable that Palantir is more likely than not to knock it out of the park the next 6 quarters, 4 to 6 quarters. And I'm comfortable with whatever the stock does over that time period, because I don't think people still really grasp what is happening in the enterprise world. I speak to my friends in the enterprise world, and they're telling me that it is the weirdest, it's like the weirdest moment in time. Like, entire companies are like, what the like, we need to rethink everything. Like, literally everything, okay? And there aren't that many options. Here's what's so amazing. It's like, kind of, again, I'm going back to Salesforce. When all of us adopted Salesforce in the 2000s, it wasn't like there were 50 options. Like, are we going with Salesforce or these other? It was like, it was just Salesforce.
Right.
It was like they were like the cloud CRM company. And you know what the worst part was? They kind of sucked, dude. Everybody hated them. Everybody hated them. We hated them as salespeople. The implementation people hated them. There was not a single person that I know that liked or enjoyed using Salesforce. You just kind of had to do it, man. You had to do it. Every company was doing it. So once every company started doing Salesforce, you had to have Salesforce. So what's happening now? I think we're going to start to see every big enterprise incumbent company go, oh, AT&T is doing this and they're saving how much money? Oh, wait, what? That hospital system is saving that much money? Well, why does Palantir only have 3 or 4? They should have 100 hospital systems around the world, right? Like it's not difficult. What, you don't have to overthink this. You don't have to overthink it, right? It's not over. Like, they are the AI software company for enterprise. They are the AI software company for enterprise. That's it. That's the entire thesis. There aren't 20 or 30 like AI software companies for enterprise. Like,
so let me summarize this up and let me know if you think this is accurate, because I think what you're saying here makes a lot of sense. I've been justifying the premium on the valuation here on the channel for the past couple of weeks based on what you just said, that, hey, they're the only AI software company around. That's why the market is obviously just saying, hey, like, we'd rather buy Palantir over Snowflake because Snowflake doesn't have an AI plan. Palantir has an AI plan. Even if Snowflake has more revenue than Palantir, it's about future growth. You're saying, hey, Amit, 85 billion, the quantitative metrics don't make sense. Price to sales, price to earnings, it's the most expensive name in software. However, there is a super cycle of enterprise AI adoption. Palantir has already started reaccelerating growth over the past 2 quarters. If that continues to reaccelerate, even if it's not 100% growth, if it gets to 35, 40, 50% growth, The valuation is not going to matter because the market is going to want that story. And over the next 12 to 18 months, you think that story is going to be worth more than 85 billion.
Yeah, again, I don't look at valuation, so I don't look at multiples really, or other than multiples, it can be a signal of how the market views a company. That's the
But so,
only.
so why? Why don't you look at multiples at all? Like you know, like entry price matters. If you bought Tesla at 400 at the top, you know that matters.
What no, what the only thing that actually matters is expectations and what people know about a company versus what actually is happening. So, um, multiples to me don't matter, because if people are assessing, hey, if you feel that you know something about Palantir that isn't being appreciated by the market, once the market sees what you see, that should be a positive reflection on the stock,
Right.
period. So if the stock was trading at 20 PE before that, it will still be, it doesn't matter, or 100 PE before that, right? It just doesn't matter. It's never mattered for me. Like, none of this crap matter. Listen, I'm just telling you how I trade. I'm
Yeah.
17 years in at 70+% annualized returns, and I only think about one thing, and it's information and alpha. That's it. If I feel that there is information that is unknown or being underappreciated by the market, that the market will come to terms with over a period of time, I trade at the point of information imbalance, and I exit at the point of information parity. That's it. That's the only thing that I do. I don't do anything else. And I do it all off of like this trading machine right here. Like, this is it. And so like I trade off of like Schwab, which is whatever. And by the way, placing the trades, I don't even barely look at them. I don't. Sometimes I like buy the wrong stock. Like, I'm not. I'm that bad. I'm that bad. But what? Because, and sometimes I'll spend like 30 or 40 or 50 hours doing deep dive social arb research on a company, and then I'll place the trade and I'll mess the trade up, and I won't even realize it till the next day. You know, like, I'll buy an option, but I'll like buy the put instead of the call. Like, I'm not that's happened at least 3 or 4 times in the last 10 years. And it's because I don't value the fact that, oh, did I get the wrong strike price? Should I have gotten this other exact strike, or I just don't care about that. That's not where my energy flow is going.
So does your energy at all care about JPOW and 50 bips and rate
Oh
cuts?
God, no. I watch every once, and I laugh. I was just with my buddy Kevin, meet Kevin, out in Vegas at his show, and he always wants to talk about that stuff, and I was like, dude, whenever I just want to know about that, I just watch your show, dude. That's it. So I was like, he does such a good job covering that. I was like, if I want to know, if I want to get someone's perspective, I'll literally just go watch. I know every other day he's doing a show on it.
Yeah.
So I'll just go watch his show on that. But I could care less. I could care less about macro anything. Macro is
So in 2022, when interest rates went up and the macro collapsed, you went heavy on NVIDIA because you saw AI. You didn't care about interest rates going down.
I didn't care. I never care about there's only one time, two times I've ever cared about like a macro environment. One was during the 2008 crash. About a third of the way into that crash, I decided I wanted to completely cover all my long positions, hedge them, excuse me, and I did. Uh, I think I ended up having like an evenish year that year, roughly. And during the pandemic, I went all in on the macro trade that was COVID. And, people all know this story about me. Before COVID hit, I was interpreting Chinese newspapers, trying to figure out what was going on. I became obsessive about it. I didn't sleep for 3 weeks. I was spending I think I was spending 5% of my portfolio on weekly put options, and losing all my money every week for three or 4 weeks. So I lost like 20% of my total net worth portfolio.
Holy shit.
Shorting, basically buying puts on the S&P and buying puts on casino and airline stocks, and the market never moved. And I thought I was going mentally. I was like, there is a pandemic that's about to hit the world, and I'm the only person that cares or sees it. And I was watching CNBC back then just to see what the hell people were talking about, and the market fell 2% one day. And I'll never forget this. The market fell 2% because of worries about this thing coming out of China. And they were like, this is what we've been waiting for. This is the buying opportunity we've been waiting for. I was like, I thought I was going to put my fist through the TV screen. Okay.
You had a real Michael Burry moment in 2008. He was going crazy as well, right?
Yeah. But like so I did it one more week. I lost 20% of my poll. I did it one more week, and finally that next week was when the market came apart. And so that was the year that everyone knows that this is like the year that I really amped up on like YouTube. I was on every day talking about this, but it was, I think I got like a, I don't know, 400, 500% return total portfolio that year. Cause I shorted the market, and then of course went long on the, I think it was exactly one day after the dip, 2 days after it bottomed. But again, that was the only time that macro mattered. And the reason why I cared was because the macro was a social arb trade for me, right? It was based on something very real that nobody saw for whatever reason or believed to see, because it was a black swan event that people's brains just couldn't process.
Right.
So for me, I was willing to trade macro because it was an information arb or whatever social arb trade. But what can I bring to the table in terms of assessing JPOW or interest rates that a billion other Wharton grads that just literally just do nothing but think about that crap all day long? I mean, honestly, you ask 10,000 people about this, they'll give you 10,000 different answers. I am not going to try to compete with a 10,001th opinion
Right.
of what that's going to happen. Like, what the hell? How would I know more than them? Like, it's irrelevant. So I'm going to stick with what I do best, and I'm
So
going
let
to
me
ignore
let
macro.
me ask you this: are you still in the NVIDIA trade or no?
Yes.
Okay, so Stanley Druckenmiller rode NVIDIA from I think 150 to 900. He got out of it a couple months ago, and he went into Palantir. Now, not all in Palantir, but the general thesis of his portfolio was starting to shift from the hardware plays into the software applications of AI. Are you of that opinion that a lot of the AI value is not going to go to NVIDIA now? It's going to go to software companies?
Maybe. Yeah, I am hedging around my NVIDIA trade often, just to be clear. So I've hedged it twice recently to where I'll hedge like 70% of it. So I'm being a lot more cautious with my NVIDIA position now, but I just don't want to take the tax hit on it. Yeah, I know that sounds great. By the way, I always regret this. By the way, I do love NVIDIA besides the whole tax situation. And I do think I do like the risk reward on NVIDIA going forward, which is why I still own it. But my tax position contributes to that as well. But yes, generally, what you just said about it moving from picks and shovels to applications is a big part of the Palantir thesis for me. And what's so fascinating about that like thought is that there aren't that many applications that are worth anything in AI. This is the best part. I love it when you only have like the reason why Palantir is, I guess, trading where it is PE wise. There's not that many options, man. Like, if you want to invest in the application side of AI, what the hell are you going to invest in? Like, there are things you can invest in the private market, but even that stuff, I see all that stuff. None of it looks super convincing to me.
You don't like
Palantir,
OpenAI at 150.
um,
Let me not even bring up valuation because you don't care about that. But you don't like OpenAI compared to.
I'm not saying I don't like it. I'm saying that I don't think I know anything about OpenAI that everyone else doesn't already know about OpenAI or fully appreciate. And I think the risk reward looks a little bit different on OpenAI, because there's an unknown about how much of this power is going to be in the hands of the LLMs in terms of monetization, right?
Right.
Like, because like you have five big ones, right? You have five big ones. To what extent is there going to be pricing power, right? Or to what extent, how much pricing power will there be in those models long term? I have no idea. It could be incredible, or it could be like it could get
It could be a commodity.
democratized.
Yeah.
Yeah,
So the reason
I just don't. I don't have the answer. But you know what I do have the answer to? I think is that I don't think in the next 18 months there are any players in software that are going to be able to easily replicate what Palantir is doing in the marketplace with enterprise AI solutions. I think they are not only in the pole position, I think they have obscene amounts of pricing power, in the marketplace right now. Because when you're looking at a solution, it's not like, okay, we're looking at Palantir and these other four companies that do basically the same thing, more or less. Which one is slightly better and which one's getting us the best deal? Again, you have to understand, I come from a place of, I'm a sales guy, right? Like I sold software, right? Like I sold software solutions. That was like my career before I became a full-time investor. So I'm a bit obsessive and I don't think Wall Street has a freaking clue how important the sales cycle is and
right.
sales differentiation is. I don't think any of these guys have ever worked a day in their life in institutional like software sales. And I have so much respect for differentiation in that model. And when you actually have that much of an advantage to where you're not selling against someone. Usually, when you're not selling against someone else, you're having to convince the sector or your clients that they should even talk to you or that you have a product that even they should even care about.
Right.
Palantir is in this weird place where, like, very recently, by the way, like right now, like very recently, as we're speaking, the market, these boardrooms are all realizing we need an AI solution. We don't just need like AI, like we need an actual AI solution here that is enterprise that can take the AI and really help us do things with it across the entire organization that can help us solve problems, right? So who is that? And it's so obviously Palantir. It's a special moment in time for that company. And I don't know if in 18 or 24 months, if they're going to have multiple competitors that they'll be dealing with, if AI will start to displace what Palantir does. I have no idea. All I know is the next 12 to 18 months looks damn good for them. Forget about stock price, just as a company. Like that's a company I want to be at the next 12 to 18 months selling for. Right. And so if I want to be at that company in a sales job, like if you were like Chris, you could just take the next 12 months off of investing and just go be a senior salesperson at Palantir. I might consider it, dude. Like I'm
Yeah.
not kidding. Like I might consider it because like that is a platinum job right now. So the fact that I would do that, how can I not invest in Palantir? Like how can I not?
I think that makes a lot of sense. And the reason I brought up OpenAI is because, as you said, the LLMs ultimately will be commoditized. Maybe OpenAI wins and GPT wins, but I know you've done some research on this. The reason there's maybe not that many multiple competitors like OpenAI's multiple competitors because that ontology that Palantir has that makes those LLMs useful. That is where I think the AIP bootcamps start to accelerate because if no one else has the ontology, no one else has AI that's useful.
Today, and my concern for Palantir in 3 years, okay, 2 to 3 years, is at what point does AI create the ontology for you?
So talk about that. This idea that software will get commoditized by AI itself. We're seeing this with Klarna getting rid of Workday and Salesforce. How are you thinking about that conundrum in enterprise SaaS?
So, we just don't know yet. I think the really important thing as investors for us to remind ourselves every single day is that when as it relates to AI, none of us, and I mean zero of us, can confidently predict how this is going to play out over the next 5 to 10 years. I lived through the dot-com heyday, okay? Like I was there in 98, 99, 2000. I was there in the middle of it. Do you know what we thought e-commerce was going to be back then? If we go back to 99, 2000, do you know what we thought e-commerce was going to look like in the future? Want me to tell you?
Yes, I
There was
would
a
love to know.
company, called mall.com. And I'll never forget it because mall.com, if you went to their homepage, they basically would configure like a footprint of a mall, like a diagram of a mall with stores. And that's how you would navigate the internet. You would literally like hit on Neiman Marcus or you would hit on Macy's, and it would take you, the way that you would see Macy's products is you'd have to go along the diagram of the mall, like the 2D diagram of the mall, and find the store, and then you could see. That's how dumb we were back then. Like there's no way that anyone knows how all this is going to play out with AI over the next 5 to 10 years. So I think what we learned from that is let's not even try. There's no reason to try. Let's just look at like 12 to 18 months out. I do think there is a chance that AI itself, if you listen to Sam Altman, he's hinted at this, that the AI itself will displace everything. And I do believe that that's possible. I just don't know how long it takes until we get there. I don't know if that's 3 years or 13 years or 23 years. So I don't want to try to figure that out right now. There's no
Right.
use in doing that. I do want to say that my company, Ticker Tags, we were an ontology company. So that company was based on hand curating. I think we had I don't know, it was like 1.3 million word combinations that we hand curated, that each of those word combinations represented how someone would speak about a topic or a brand or a product that we would want to capture in a tag. So those are the word combinations that we would then capture the volume of people on Twitter that said that word combination, those
Right.
words together in a tweet, and that would represent the volume of people discussing this granular topic. But we had to hand curate that over the course of 2 years. I had 40 people in the room doing nothing but literally analyzing everything about a company, and then they would look at how people speak about the product on Twitter and curate tags. So like I have a lot of respect for building ontologies because it's an incredible amount of work, and you can't just brute force do it. To
Yeah.
create an ontology, you need to have a thorough understanding of the context and the company, like in this case, for what Palantir does, of the company. You have to really understand internally what are the things that matter, right, to that company.
Right.
And it takes a tremendous, it just takes knowledge, and it takes opening up your data, right? And they somehow figure out a way to do it really quickly, but they have cracked the code on doing that. But don't think for a second that other people aren't going to come racing in trying to do the same exact thing. So I have no idea who else is going to be knocking on that door in 12 to 18 months. And I don't care. I don't care. Like I'm not like, I don't care if I'm out of Palantir in 12 months and never think about it again for the rest of my life. Because I just don't become emotionally involved with companies,
Right.
right? Like,
Not like me with Palantir.
yeah, I mean, and by the way, it's fine. I love it that there's guys like you, because if you're having fun doing, and by the way, I take it back. I do become emotionally involved with companies. I actually do, but then I break off those relationships in a second. I never look back. So Celsius is a great one.
Can you tell me about this? What is your history with Celsius?
Celsius, I had a really strong thesis on Celsius. I wrote about it, like, I don't know, a year ago, and I was already invested at the time. And it was a tweet thread that I had that anybody can go back and read. but I did know that there were risk involved with Celsius. There were numerous things that could happen. One of them would be simply like a social video that went viral that would propagate false news about the company, which, by the way, is exactly what happened. And I still have a thesis that that might have been the thing that contributed to Celsius sales flattening to some extent, right?
Right.
And so I knew that could happen. So what I did was I went out and I spent an insane amount of money, like the amount of money that I went out and spent to buy Celsius data weekly. So I'm basically buying transactional swipe data on Celsius every week, just like the hedge funds do.
Is that
And
expensive or no?
it's very expensive.
Okay.
Yes, it's ridiculous just for one company, for one freaking company. And so I get that data every week delivered to me the same exact time as all the hedge funds do, right? There's just like a few hundred people in the world that get that data on Celsius. And I was keeping an eye on it, and then one week the data fell apart. And I was like, 1 week is not enough to set a trend. Like it could have been anything. It happened again the next week. And I immediately came out and I discussed it on our YouTube channel, our Discord. I think I tweeted about it. I'm like, guys, I'm out. I don't know what's going on. I think I might know what's going on because it was the same. It was about 5 to 6 weeks after that video went viral with that guy who basically said that Celsius had cyanide in it.
Yeah.
And
Yeah.
people didn't realize how viral this video went. So viral. I don't even know what the total view count of all the shares was because it got reshared over and over. And then people were stitching the video on TikTok. Like we could be talking about hundreds of millions of views if you include all the stitches. So I was like, now I didn't know the degree to which people might like lay off. And when I say people not buy Celsius, like even a few percentage points of people stopping to buy Celsius would be enough to flatten the sales out, right? Temporarily.
Right.
That's what people don't. It doesn't take much. It doesn't take much. And that's exactly what, again, I don't know that that's what led to it, but I do know that that's what happened in terms of their sales. And I was like, I'm out. Now, my regret is that I should have gotten out and shorted. I should have gone out and shorted, right? But I just got out. So I got out at like the peak pretty much.
Like 96-ish, around that range.
I don't remember the exact price. It was within 10 or 15%, I think, of the peak, which it was looking back, it was glorious.
This was a big part of the portfolio, Celsius, or it was
What?
was this a big part of the portfolio, Celsius, when you got out?
Oh yeah. It was a monster trade for me. Well, I mean, I wouldn't go out and spend that kind of money to buy data on one stock just as insurance, So looking back, I'm so glad I spent the money. I'm so glad I spent the money on that data. But
can you tell us about some of your biggest losers? Do you have any big losers?
Yeah. So my biggest loser, the one that I still lose sleep over, but I learned so much from it, man. And this is going to make you feel good about what you do at Palantir. And this is why you need to follow guys like Amit. Did I say that right? Amit?
Yeah, you said it right. You said it wrong on they were like, he said your name wrong. I was like, guys, it's not a big deal. Like,
I'm terrible with that.
But trust me, I'm terrible with pronunciations as well. The chat will tell you that. Yeah.
But this is why you need to follow guys like this. So I invested in a company right before the pandemic. It was called Restaurant Brands. They own Burger King, KFC, and Tim Hortons. Okay, so two of the three companies that they owned, I had a monster social arb thesis on. Burger King had the Impossible Whopper at the time.
Correct.
It was maybe the biggest thing that Burger King had ever done. Okay. My social arb analysis, I probably put 30, 40 hours of social arb analysis into that trade. And I was like, this is the biggest moment Burger King has ever had. KFC had the chicken sandwich. Wait, was it yeah. Because a KFC, not KFC.
Popeyes. Popeyes had a really
Popeyes. When I start thinking about old trades, there are like dozens between, like 50 of them between then and now. So okay, Popeyes had the chicken ward. Remember the chicken sandwich?
Yep. People died. People died over that sandwich. Like,
yeah,
legit died. Yeah.
that we did a whole episode just on that sandwich. That by far, indisputably, was the biggest thing that ever happened to Popeyes. So 2 of the 3 companies that they owned were having the biggest thing in history happen to them in the same freaking quarter, dude. Okay, I was losing sleep over this. Those two. The problem was those 2 companies represented about 40% of the parent company. 60% of the parent company was Tim Horton. I did all this work on Tim Horton, everything I could do for my house, any place where I can scour data on Tim Horton, I was doing it. Bottom line, Tim Horton had been like flatlining forever. Nothing ever happens at Tim Horton, dude. Like, it's just Tim Hortons. So I was like, what could happen at Tim Hortons this quarter to screw up my trade? I mean, that would be insane. What could possibly happen at Tim Horton? So I went all in on that trade, dude. All in on it. So what happens? Earnings come out. It was the quarter of all quarters for Tim Hortons to screw up. Right? I was like, and so the company comes out and it's like, record sales at Burger King. We've never seen anything like this. Record sales at Popeyes. We've never seen anything like this. And it was like, Tim Hortons were having some issues. And I'm like, wait, what? And so it wasn't even like the stock got like crushed or anything, but I was in massively levered call options. I mean, we're talking like 20% of my net worth in call options on this company. Gone.
The Canadians drink enough coffee. That's it.
All gone. So here's what I could have done to save that trade. I didn't realize that literally 3 weeks earlier, there was the Tim Hortons annual franchisee meeting in Florida. Okay. Every franchise person for Tim Hortons, not every, but a lot of them went to Florida. And supposedly, after the fact, I learned this, there was like a massive, like, just angry mob of franchise people talking about how shitty everything was going and their sales were starting to fall apart that quarter due to these decisions that were made at Tim Hortons that nobody would have known about, like just looking at consumer data, right? Like, it was all like the franchisees knew and they were there. I could have gone to Florida, literally sat at the bar and just spent 2 days talking to franchisees. And if I would have done that, I would have probably saved myself a 7-figure loss that I had to take on that trade. It was the one time that it was the one trade that I actually, like, I think I went to bed for 2 or 3 days. And I'm not joking. Like, I don't get depressed. Like, nothing gets me depressed, but that one shook me because it was like I was on such a high conviction high.
Yeah.
Like, I had so much conviction in the trade. There was nothing that was going to disrupt that trade, and it did. So I learned my lesson, and that's, I learned this lesson over and over again through the years. You don't know what you don't know. There are always risks that you can't see, and you have to understand that those risks are out there. In this case, you cannot leave anything unturned, right? In a trade. And even when you do all the work, you still have to understand that there are risks that are out of your control. Another risk was on a company, a toy company, where I completely crushed the analysis. This is actually when I had my hedge fund. I had a hedge fund for a few months back in the mid-2000 teens called Social Information Arbitrage Capital. I spent 2 years raising money for the fund. I had made 2 trades before I had to close the fund down because I started the fund at the same time that I started ticker tags that I was selling to hedge funds. And my hedge fund clients told me that I wasn't allowed to manage a hedge fund on the side because they were afraid I was going to front run. I thought I would front run my data, which makes sense. I would front run my data for my own fund, and then they would get the data a day late and trade on it, and I would be front running all my clients. the fact that I didn't see that people would think that makes me an idiot. So I had all these investors in my software company and all these investors in my hedge fund. And I was like, I can't, I have to close the fund down. And I just gave everybody their money back.
Yeah.
But before I closed the fund down, I made this trade on this toy company that made the Elsa doll. Remember the Elsa doll when that movie had come out,
Yep.
Frozen? And it was the biggest product that the company had ever made. It was the biggest quarter that company would ever have, ever. Jack's Pacific is the name of the company. And I knew that this was going to be the biggest trade of my life. And it was like my first trade in the hedge fund. And earnings came out. It was all levered call options in my hedge fund. Huge trade. Earnings came out, and the stock before the market opened was up 30%. I was going to be up probably 300% on my options.
Yeah.
Like, this is it. Like, my first trade out of the gate. Stock opens within 1 minute of market open. It's down, and it closed down, I think 30%-ish on the day. And I was so distraught. I didn't know what happened. I didn't know what happened until like a month later when the report came out that the number one institutional owner of that stock, Jack's Pacific, they owned over 10% of the stock, had dumped their entire 10% position in one day, that day that earnings came out. So behind the scenes, they had become so frustrated with this company, and they were looking for an exit window. But the company was low liquidity, and there was no exit window. So when they came out with this blockbuster earnings report, that was nothing but insanely good news that no one could have ever predicted. They used the liquidity and the positive momentum of that report and buyers to flush out their entire position and crash the stock 30% in one day, which, by the way, is kind of an insane move. I've never seen someone do that. But of course, like, that taught me, that was a real lesson of, like, you just don't know. Even when you're right on every metric, if someone who owns 10% of the company decides for some random reason that has nothing to do with the fundamentals of that moment in time, you're done. You're dead in the water. And it has nothing to do with your research. You could do everything right. So there are always things that you don't know in the market.
Let me ask you this. A lot of people are getting upset about this. Karp sold 9 million shares. What are your thoughts on that?
That's nothing. Who cares? Like, what would that have to do with anything? So I think that Karp, if I were to have a thesis on why he's just exiting generally and why other people have exited Palantir that have been in early, I think these people are smart enough to know Karp. I believe Karp when he says his company can be 10 times the size, and I believe he's going to do everything in his power to make it a 10x from here. That said, he's not an idiot. Other people that have supported Palantir since day one are not idiots. They see what's happening with AI. AI brings in a tremendous amount of unknowns in the far off future. And when I say far off future, I mean like 2 to 5 years or 2 to 10 years.
Right.
They are well aware of the fact that there is an outlier chance that AI comes in and wipes out all these companies, including Palantir. Now, it won't happen in 2 or 3 years, but people might start to understand that in 2 or 3 years and might start to sell off all these companies, right? I've said this. There's a new world order coming that AI is ushering in. We don't know exactly what that looks like yet. So when you have something like AI, you have to start to de-risk yourself in certain ways. So if I were Karp, I would be. He still has an insane amount of Palantir, like, but you can't just sit there with 100% of your net worth in a company that could theoretically, over the next decade, start to get wiped out by this new magical technology that we have called AI that nobody knows what's going to happen yet. You just don't know. And so it makes sense.
Do you think insider selling in general matters for companies? Insider selling?
I'm sorry, what?
Do you think insider selling in general matters?
Insider selling sometimes does, but usually does not. You've heard this a million times. There's an infinite number of reasons that people sell. Infinite number of reasons. Only one of those reasons is because they're concerned about the short-term viability of that company.
Right.
And so I'm not going to get into all the reasons why some, because we would be here all week talking about them. It doesn't make sense for anyone to be that concentrated in a single position ever. Period. It just doesn't. You look at Jeff Bezos. Jeff Bezos wants to start rocket companies. You know what I'm saying? He wants to buy, yeah, like he wants to do things. Jeff Bezos also knows that in 5 years, he might want to do something outrageous that's going to cost 10 or 20 or 30 billion dollars or 50 billion. He wants to be able to stroke that check. And he can only do it if he has access to liquidity.
Right.
And so that's why Bezos is selling and selling and selling, because he has so much. And you have to have a liquidity plan, because you can't just go sell it all right in one quarter. That's not how it works. I don't have any issues with it at all. I think there is risk in Palantir, though. I think you have to understand that there's risk. Like there's risk in every company, and there's risk in Palantir. So Karp knows that, and he doesn't want to have 100% of his net worth in a company where risk exists, right?
Do you think at all about Peter Thiel? Does he come into play on your Palantir thesis, or
Same thing. Same thing. He's involved. Peter Thiel's involved in a lot of crap, man. It's not just Palantir. Like this guy, you got to realize that these guys have a new shiny spoon every week.
Yeah.
When you're in that position, these sorts of like alpha billionaire guys, man, they got something new every week. They might want to put all their money behind a politician, for all you know. They might want to take over a country, dude. Like you can't get in the mind of a Peter Thiel, dude. Like, by the way, I will say this. I will say that a lot of these guys all are fully understanding of the tail risk that exists for all of these companies. That's real. And that's something that all of us, especially us Palantir investors, have to understand. So again, I'm not super concerned about it in the next 12 to 18 months for Palantir, but I don't know if I'll be in Palantir for longer than 12 to 18 months. Because as we start to get closer and closer to AI doing ridiculous things, you just have to be, at some point, you have to be careful, right, of the application companies that are applying AI. Now, I still think there's a higher probability that Palantir is around in 10 years and way, way, way bigger than it is today. But there is a chance that it like kind of just disappears over the next 10 or 15 years.
Two last questions for you. Crypto. Did you ever play that trade, and are you in that trade right now?
Yeah, I've only had one crypto thesis, and it's the same thesis I have today, which is I don't overthink crypto. I'm not going to try to determine whether crypto is going to be the future currency of the new world order or not, right? Like that, I don't care about that. All I care about is the fact that other people care about crypto. And for every one gold bug from my generation, and those people are super, super annoying. But for every one gold bug, there's like somewhere between 1,000 and 10,000 crypto people of the younger generations. And that's all I need to know. That is the strongest crypto thesis you will ever hear, because what that means is that assuming that crypto remains stable and doesn't get hacked, okay, Bitcoin, I'm referring to Bitcoin mostly right now, assuming that it shows that it doesn't get hacked by some sort of future generation supercomputer, and assuming that governments don't shut it down and it remains a viable thing that people are allowed to invest in, I have a hard time seeing how more and more people don't put a small part of their net worth in crypto over the next 25 years, as we see this, like it's an $85 trillion transfer of wealth from the older generation to the younger generation. And that's happening over 20 to 25 years. As that happens, we will see money start to move into Bitcoin in small bits on each of those people. But it's $85 trillion that is getting transferred. And crypto is now an institutional asset class. And it takes many years for an asset class to truly be institutionalized. I'm going to go back to the salesman in me. You have to develop marketing assets. You have to go through training. You have to get all these financial institutions have to get comfortable with it. They are never going to be on the bleeding edge. They're always going to be on the back end of this, right?
Right.
So what will happen is every registered investment advisor over the next 2 decades are going to have thousands of conversations with families and with individuals who are inheriting money or coming into money, or who are signing up with them. And the conversation will come up that will either be broached by the RIA or by the individual to say, hey, what are we doing about crypto? What are we doing about Bitcoin? Should we put anything in Bitcoin? And not every one of those conversations is going to result in, yes, let's put 1 or 2 or 3% in Bitcoin, but some percentage will. Whether it's 10% or 20% or 30% or 40% doesn't really matter. You have to look at the overall trend of 80 something trillion dollars over 20 to 25 years going from this generation to this generation, and people feeling like they should have some sort of hedge or some sort of participation in, or they just want to say they own it because they feel embarrassed if they don't own it because everybody talks about it all the time, right? So you don't in my opinion, I don't want to overthink Bitcoin. I don't want to
Yeah.
overthink crypto. My thesis is very simple. I just explained it. And I'm never going to go deeper than that as it relates to Bitcoin or crypto. And so I have, I think the weighting for me is somewhere between 5 and 10% of my portfolio in crypto, and I'm comfortable there.
Are you a Nike fan with the sneakers behind you, or you're just a sneakerhead?
I hate Nike as a company right now. Those Nikes are like 15 years old, 15, 18 when I collected. I love the Air Force Ones, but as an investor, I hate Nike. My friend Bobby Hundreds just wrote the most prolific like monologue on Nike. It's like a 25-minute read, 30-minute read. And he wrote it like 3 days before Nike's CEO stepped down, or 2 days before he stepped down. And it's basically, it's why Nike failed over the past 5 years, 5, 6, 7. And it's an incredible read. If anyone wants to read that, just go look it up. Bobby Hundreds Nike. I'm some of my biggest trades have been in Nike competitors over the past 5, 6, 7, 10 years. You know that, from Hoka, right? To
Again,
on,
social arbitrage. It's just such
yeah,
an incredible thesis.
yeah. They're getting attacked from every which way. Adidas is still hot right now, as a big brand, but it's like everyone's thriving right now in that place except for Nike.
Okay, last question for you, Chris. First of all, thank you for coming onto the show. The 1,500 people here really appreciate your thoughts, your time that you're spending with us. I gotta get your take, because I've never fully heard it from you. We've had some conversation about this. Humanoid robotics.
Yeah.
Where do you see this industry going? Why are you so excited about it? And is Tesla ultimately the winner?
Yeah, this is everything to me. This is my thesis of all thesis. Like, this is half my life revolves around humanoid robotics right now. Like, I made the biggest investment I've ever made in my life in humanoid robotics this last year, in 2 of the 3 humanoid companies that I think matter. There are 3. There's Figure AI. I'm an early investor in Figure. And I love Figure. Apptronic out of Austin. I'm an early investor in Apptronic, and I love Apptronic.
And you got me into Apptronic, which I'm very grateful for as well. Thank you for that.
Yes, and Tesla, who I think is going to be a monstrously big winner in humanoids through their Optimus division. I'm invested in Tesla. I invested more recently, but I'm not nearly as invested as I want to be in Tesla, and I really hope the stock just stays down for a while longer. Embodied AI, which is basically robots, is AI with a large barrier to entry. Okay.
Yeah.
So when you look at AI, all the conversations we're having right now about AI are very confusing, and nobody really understands who the winners are. No one really understands where the barriers to entry are. No one really understands where the pricing power is. We all have thoughts on this, and we discuss it and we argue over it, but no one really has a lot of conviction when it comes to AI of how to monetize it. Who is going to be able to monetize AI? Embodied robotics is totally different. You have an AI brain inside of all of these future robots, but these robots have, fine-tuned custom actuators. They have scalable hardware platforms, manufacturing, logistics, supply chains, distribution. You have servicing. You have, I mean, there is so much work that goes into embodied AI products, specifically humanoids. Yes, any smart person can build a humanoid in their garage right now. And there are people that are building their own human. I've spoken to brilliant, brilliant kids who are building humanoids in their garages right now and think they're going to have the next humanoid company. They don't understand how incredibly difficult it is to have a scalable platform with supply chain to be able to manufacture millions of these robots and maintain millions of these robots and service millions of these robots and actually be trusted by the world's largest enterprise companies, by manufacturers, by warehousing companies, by logistics companies. 1/3 of the world's GDP is physical human labor, that is going to go away over the next 25 years and displaced by robotics.
Why is it going away? Why is it going away? How are you so confident about that?
It's just a natural evolution of humans. If you look at the last 500 years, it's gone away, and it's going to continue to go away. This is not a new thing. Right? We don't work on farms like we used to, right? Like we're not blacksmiths like we used to. Like we all used to be physical laborers. All of us used to be physical laborers, like 95% of us. Now it's a lot less, and it's going to continue to get a lot less because as humans, we don't want to do back-breaking work unless it's something we really enjoy. So there will always be elements of physical labor that we'll continue to do, but we do not want to have people working in factories doing this. Okay, do you want to live your whole life doing the same thing repetitively over and over again in a factory for 40 or 50 years, and then you can't walk by the age of 60 and 65? You literally can't walk because your back has torn disc in it and you're so messed up physically. Do we want that for our kids or our children? Absolutely not. We want them to be able to live great lives. We want them to be able to have ambition and pursue careers and contribute to humanity in beautiful ways. We
Right.
want them to have jobs, right? But we don't want the work week to be 70 hours, right? We want the work week to go down and down and down so you could do better things with your time. That's how we've evolved as humans throughout
How
all
do
of.
you reconcile the argument that that's a very privileged perspective? Because work is work, even if it's backbreaking work. At least there's money on the table, versus being a YouTuber, for example.
We want every human to be in a privileged place eventually, right? Like, I mean, yeah, of course it's privilege. I don't want to take away someone's job working at a factory. I want their kids to not have to work in a factory,
Right.
right? I want their kids to have a better job than that. Um, the truth is the majority of uh, use cases for humanoid robotics are not displacing human workers anytime soon. We have hundreds of millions of jobs that are needed where we don't have human workers because there's a lack of physical laborers in the world, right?
Yeah.
We have new industries that want to be created, but they can't because there aren't enough workers. The reason why these humanoid companies, I'm not going to give away too much right now, but I will tell you this. These humanoid companies, if you knew every company on earth is in line right now signing letters of intent to like get as much allocation as they can of these humanoids. I'm going to say that that's happening with every major humanoid company right now. And that's why you see guys out there like Brett at Figure AI, and Elon at Tesla, like have so much confidence when they say things like, "Oh, this is going to dwarf the auto business." Like Elon has said this. The problem is we don't listen to anything that Elon says because half the things he says are just ridiculous. So people don't know that this part is true. Like when Elon talks about this is real. This is actually real. I've been behind the scenes seeing all this for years at these humanoid companies, and I'm telling you, it is real. The only way that we as retail investors, well, not me, but generally the people watching the show today, could invest in this is to trade Tesla right now.
Yeah.
I'm hoping it feels a little bit early, and that's why I haven't gone all in on Tesla yet. If anyone wants my humanoid thesis on Tesla's Optimus, it's the pinned tweet at Chris Camillo. It's like 15. It's a 15-part tweet thread that's still relevant. I wrote it in January, but it's still relevant today. I think Tesla is going to be one of the most exciting humanoid trades on Earth at some point in the next 24 months.
So where do you like 10 trillion, this crazy age of abundance? Is this based on Elon having the vertical integration of the manufacturing needed to get these out at scale? Is that why Tesla wins?
Yeah. It's just Elon being one of the top 3 or 4 non-Chinese humanoid companies. There's Elon is probably in the best position as it relates to scalability of his platform because he's willing to go out and do the things necessary, make the investments necessary to fly the second that his humanoid is ready for prime time. I think the other humanoid companies are not going to be as aggressive as Elon is going to be when it comes to manufacturing and scale. Because Elon's a nutbag and he's willing to take on that risk when he sees something that he believes in. And that's why we love Elon, right? And so I think I'm not saying that Optimus is going to be a better humanoid than Aptronic or Figure's humanoid. I think all 3 of them will be very capable in terms of doing commercialized work. There's something like 900 million boxes that have to get moved from point A to point B every year. No humans want to do that work. It's dangerous work. It's backbreaking work. You don't even need an AI brain in a humanoid to do that work, by the way. So there's like 10,000 other jobs, right, that are behind that, that are just waiting. But every company on Earth is wanting to expand right now, but they can't because of human labor. It's too expensive. They just simply can't get enough humans to do it.
And if you agree that populations are not really growing the way they were before, that's a whole nother issue, right?
Exactly. I've said this. I think Elon is playing everyone when he comes out and talks about population being the biggest issue because he knows he has the solution already. He has the solution. He's planting the seed that population decline is going to lead to the downfall of civilization, which theoretically could be true if not for the fact that we have embodied AI and humanoids on the cusp of hitting scalability in the next like 3 years. So he's like, "Oh, I've been talking about this problem for 5 years. Oh, look what we have now." So that governments don't try to stop it in any way, like overly tax them or anything like that. So
I never thought about it from that perspective because Elon does build up narratives, like the free speech narrative he built up, and then he bought Twitter as the solution. Kind of the same thing here with robots.
Exactly. And I listen, I think that one was a little bit more pure, but in terms of his intent,
yeah, I agree.
But I'm very excited for Optimus. I want Tesla to be my biggest position in my portfolio at some point. It's not even close to being there. It's a small position right now. I want it to be my largest position. I'm very nervous about his auto division. I'm really nervous about it.
What, you're worried about FSD? What is the worry here?
I've always said FSD was like 15 years away when everyone was saying it was 1 or 2 years away. Not anymore. I'm going back like 10, 11 years, right? So yeah, FSD, yeah, we're getting closer now, but it's always further away than anyone realizes. And like, there's clearly been people who have been right on that and people have been wrong on that. And Elon was just clearly wrong on his time frame for FSD.
Right.
So we're getting closer now, but it's not like 6 months from now. I don't think. I think we're like, low single digit years away, but there's still a lot of regulatory stuff that has to happen. And at the end of the day, like FSD is really important, but it's not going to happen overnight. I don't think. It's going to happen city by city, state by state. It will happen over the next decade. It will be a really, really big deal eventually. Like eventually it will be monstrously huge. But that's one of those things that takes a lot of time because of safety concerns, even if they're irrational safety concerns, right? Like I agree, they're irrational safety concerns, but that's just the way the world works, right? So
And for Optimus, you think the use cases in the warehouses, not the people doing your laundry. You think the real use cases are for like Amazon, not for a person.
Oh, no doubt. Yeah, the first 5 years of allocation is almost exclusively going to logistics, warehousing, and manufacturing. 100%. Yeah. So, and the reason for that is those industries place a very high value on those jobs. When you have a humanoid working 23 hours a day, you could charge $100,000 a year per humanoid, right? So like you could literally charge $100,000 a year per humanoid, and that will be the best, highest monetized use of a humanoid's time. So it's going to, and by the way, when you're a humanoid manufacturer, you need to focus on clients that are willing to purchase thousands to tens of thousands of humanoids from you on a lease program.
Right.
And there's only so many companies that can afford to do that at $100,000 a year. The amount of time it takes to basically onboard a humanoid program into a logistics, manufacturing, or warehousing facility, it's kind of like what Palantir does. You got to go in, you got to learn what the processes are. You have to have teams on site. This is why you have companies like Aptronic partnering with Mercedes, and you have Figure partnering with BMW, and there's like literally dozens and dozens and dozens of companies just like that we haven't heard about, that all these companies that are in queue, right? So it's because once they initiate that relationship, they want them to turn into 9-figure relationships pretty quick.
Right.
Okay. And they will, but they're going to hog all the allocation. And so, yeah, no, they're not going to give you a human. There will be like subpar. I think there will be other humanoid companies that will be like, yeah, we'll sell you a humanoid for your house, but I don't think Tesla or Aptronic or Figure is going to go down that road in the first 3 to 5 years. They just have too much demand for enterprise style companies that need manual labor.
Right.
To do very simple things, by the way.
If you see the videos, some of this stuff is complex where they're like reasoning with taking out the trash. Other stuff is like putting this here, putting that there. It's like, of course that can be automated.
That's where all the money is. It's so funny when we first started talking about this stuff. I talked to a guy that owned a bunch of yogurt shops, and they wanted to expand to 7 more yogurt shops, and they almost pulled the trigger, but they didn't pull the trigger because of the human labor issue. He was like, if I had a humanoid that can just literally just do this, like and take it like if I had that and I knew that I could have that for a reasonable cost, right? And not deal with all the issues of hiring and letting people don't show up for work, and then I'm like have to have managers over the stores when they don't show up for work. It's like I would open those 7 shops tomorrow. I mean, it's just one stupid small business story, but there's millions of business owners just like that feel the same exact way.
Right.
Labor is always the bottleneck. It's always the bottleneck. And by the way, it's usually not because the labor is too expensive. It's because you actually can't get the labor. You just can't get it. You just can't rely on it. There's just not enough of it out there that's willing to do that job or do it consistently for you.
Right. All right, folks. That is Chris Camillo. Chris, thank you so much for spending the time. I think the audience really enjoyed it. Spent
Of course.
a good hour and a half. It really means a lot. There's his Twitter there in the chat. Chris, actual last question for you. What is next? I mean, you've made a lot of money in your life. I know you're competitive, but like, do you buy Lambos? Do you just want to see the numbers go up on the Schwab account? What really is the end?
No, I don't buy anything. And by the way, anyone wants to find me outside my Twitter, it's dumbmoney.tv, has all of our socials for Dumb Money. But no, I have a foundation for kids and animal welfare, and that's my passion in life. So I started during the pandemic. It's something that I'm really proud of, and I'm hoping to grow that into a multi-$100 million, maybe $1 billion foundation someday. And I work with only like small to medium-sized charities that are doing really interesting things for kids and animals. And that's like I have two passions, three. One, my family. Two, that pretty much all my excess money that I make goes into that foundation to build that foundation up. And then three is I want to onboard every human on earth into the investor class as a way to solve the wealth gap. So
I like that.
Yeah.
I
So
love that.
everybody spends so much time focused on the income gap. Good luck, especially where we're headed with the age of abundance. Income is going to get flattened. It's going to become really, 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 really hard to have a high income job in 20 years. Okay. And so the only way to solve the wealth gap is what we need to be focused on, because there's going to be the people that are getting the $85 trillion in wealth handed down from family, generational wealth, right? Those are the lucky people. Congratulations. They're lucky. Okay. I was never one of those people either. Okay. But they're lucky. So how does the rest of the world figure out how to survive the next 20 or 30 years when the value of human labor is just going to be different? It's just going to be different. Like we will have, I think we'll have access to healthcare. I think we'll have access to having a home and food. And like, I think the quality of life is going to go up and up and up and up over the next 20 years if AI doesn't destroy the world. I think it's going to go up and up and up. But how do you kind of even out that wealth gap? There's only one way to do it, and it's to be in the investor class. So I just want to try to inspire regular people like me just to start investing. Because listen, you look at my background. I was not an institutional investor. Even my hedge fund was a retail trader starting a hedge fund. So anybody can be an observational investor. You don't need to be proficient at mathematics or technicals or charts or fundamentals. You don't know how to, you don't have to know how to read a balance sheet or an income statement. All you have to do is be able to surf social media, read comments on TikTok videos, understand how the world is changing, and connect dots back to investable opportunities of companies that would either benefit or be harmed by that change that you're seeing unfold in real time, because you're knee deep in the real world, unlike these guys in Wall Street that are distracted by noise and CNBC all day. So like, that's it. I just want to inspire people to open up a trading account and just start doing it.
And the way you do that, I'm assuming, is just building your brand and making more content, I would imagine.
That's it, man. Yeah, and I do it in a way that's fun, man. Me, Dave, and Jordan, we're best friends. We just when we do our show, we're really doing the show mostly so we can catch up with each other and just shoot the crap.
It's a blast. It's a great show.
Yeah, I mean, we don't, like, as you see, like, we don't really do our topics to like hit the algorithm. That's why our channel is still really small. It's 100,000 something, right? Like, we're not trying to be like the next big YouTuber. We're just having, we've always done our show just to have fun together on YouTube. When we were during the pandemic, we did it as a way to hang out every day, digitally. So like, we're just doing it for fun and just to share our thoughts with the world. And honestly, most of my investments these days come from my community. So they help me surface stuff. So I get more out of our community at Dumb Money than they get from me, I think. You know, we have a Discord where we chat about stuff. It's like all free. We don't sell stuff. Like I don't make one. I lose so much money on YouTube because we pay for editors, like for our short clips. Like we don't make money off of our community, but yet I make so much money off my community because, you know, every couple months they surface a trade for me. I'm like, damn, I would have been late to that if not for you guys.
Right.
So anyway, thank you for the work you're doing on Palantir. Appreciate it. Keep doing it.
I love it, Chris. Means so much. Thank you for joining. We'll see you next
Thanks,
time.
guys.
Thank you so much.
All right.
Bye.
Later.